Welcome to the Tidecrest 3's for January 2026. Each month we spotlight 3 numbers impacting the capital markets, 3 news stories driving investor sentiment, all in 3 minutes. Let's dive in. $29.4 billion, the U.S. trade deficit. The U.S. trade deficit narrowed to $29.4 billion in October, the lowest level since 2009 and down 40% from September. Why it matters. A shrinking trade deficit may provide a boost to economic growth and reflect shifting global demand dynamics. Investors are watching whether this improvement proves durable or reverses as consumer spending and global growth trends evolve. 7.1 million open jobs. The U.S. economy had roughly 7.1 million open jobs in November, down from nearly 7.5 million in October. Both job openings and hiring declined, with job openings rate falling to 4.3% from 4.5% the previous month. Why it matters. Cooling labor market demand is a key signal the job market's rebalancing. Fewer openings can ease wage pressures and inflation concerns, but if the trend accelerates, it could also point to softer hiring and slower economic momentum. 42% valuation discount for U.S. value stocks. Large U.S. value companies are trading at roughly a 42% price to earnings discount relative to large U.S. growth stocks. The long-term average discount is closer to 30%, highlighting a wider than normal valuation gap. Why it matters. A valuation spread of this size suggests large cap value stocks may offer relatively attractive entry points. If interest rates remain stable or earnings broaden beyond a narrow group of growth leaders, value-oriented sectors could see renewed investor interest. Venezuela developments ripple through energy markets. Recent U.S. operations in Venezuela briefly lifted energy stocks and added a geopolitical layer to oil market expectations. Oil prices moved only modestly, reflecting ample global supply and limited near-term production capacity. Why it matters. Even small supply regions can influence market psychology when geopolitics are involved. Developments in Venezuela highlight how changes in access, sanctions, and investment conditions can affect energy equities, risk premiums, and longer-term supply expectations, even if immediate price impacts remain muted. Minimum wage hikes take effect across 19 states. At the start of the year, 19 states implemented minimum wage increases, lifting pay for millions of workers. The changes were driven by a mix of inflation indexing and previously approved legislation. Roughly 20 states continue to use the federal minimum wage of $7.25, with Hawaii boasting the highest minimum wage, moving up to $16 as of last week. Why it matters. Rising wage floors can support consumer spending, but also pressure margins for labor-intensive businesses. Investors are watching how companies balance higher labor costs with pricing power, automation, and hiring decisions as wage growth remains a key inflation variable. Proposal to limit institutional home buyers. President Trump announced plans to restrict large institutional investors from purchasing single-family homes, aiming to improve affordability and expand access for individual buyers. Shares of home builders and residential rental-focused firms moved modestly lower amid rising housing policy uncertainty. Why it matters. Institutional investors have become a meaningful source of demand in the housing market. Limiting their participation could ease price pressures in some regions, but may also reduce rental supply and alter capital flows into real estate, with broader implications for affordability, construction activity, and mortgage markets. That's the Tidecrest 3's for January 2026. 3 numbers, 3 stories, 3 minutes. We'll be back next month to track what matters most. Thanks for watching.